Hello, guys. How we doing tonight? I am doing great, thank you. Pancake, the Rice Tune Spot has been having a little issues recently. It's lagging. It's pissing me off. Been trying to fix it, but I guess a free bot, I cannot complain, right? Been thinking of making my own that can just direct to YouTube, so working on that too. Anyway, small crowd tonight, right? Happy to have you guys with us. Don't get me wrong, but definitely a smaller crowd than usual. You know what? We'll be chilling, looking at price. This usually means that everyone has had a good day. Whenever I get very few people in here, it usually means that everybody did good and they're taking some time off. So I guess a very good sign. We're going to start by going back over what we were talking about yesterday, right? More specifically in the weekly outlook as well, and how my whole week was going to be defined by this gap. And as you can see on ES, we have finally closed above it. And on NASDAQ, we have on Tuesday, right? Today, we traded back into this gap, more specifically into the volume imbalance, which you can now retesting this old inefficiency, right? Utilizing the sell side of the curve and the buy side of the curve. And I'll mark out the same levels on ES, but as you can see, we definitely dove deeper. We also today formed a pretty undecisive candle, right, compared to the displacement we saw on Tuesday, but we formed an inefficiency below. So going into tomorrow, I'll be on the lookout for that level, or as we said, right, a continuation to the upside, higher objectives, and quarters. I'd like to start these price action reviews with also some insight about what I'm going to do tomorrow. I hope you guys enjoy that because I'm going to start doing it more. I feel like that's something that people want to see. But if we concentrate on today, we can go down, but we already have our levels, right? We have our daily inversion fair value gap, which here I'll change color just so it's simpler to understand because I just do everything blue now. So we have our inversion fair value gap that we traded back into it. More specifically, I was looking on NQ, right? As I always say, even if the SMT tells me that ES is the stronger asset and I'm looking for longs, I'm still going to long NQ because with the volatility it has, it offers for more risk to reward. Awesome to hear, Justin. Glad you want to see it too. If we go down to the 15-minute now and look more so at the intraday price action, that is where it gets a little more, not unclear, but a little less clean, if you ask me. So basically today, I did not manage to get the short. And you'll notice the short from the first initial move of CPI that often runs on side, but we had a huge manipulation after because CPI formed a range. Now, this is very rare, which is a reason why I don't teach it and don't oftentimes look at it, I guess I'd say, but we're going to look at it today. But we had definitely CPI forming a range, so the news forming range, and so we had to raid both sides of that range before we can do our daily distribution, which is what we did to this low into our higher time frame array, right? This is our daily inversion fair value gap, which was our only daily level to be able to be utilized at this moment, right? Alongside, of course, the volume imbalance, which is a part of it. And then as you can see, we had a beautiful run to the upside, targeting the highs of that opening range, right? 930 highs right here. And definitely beautiful delivery at that point, followed by a very aggressive retracement and then consolidation into a small continuation. So if I was to just look at this 15-minute fair value gap, where lies the opportunity? Well, to me, it's in this first move and this second move. Now, this final retracement, you could say that, but I tend to want to stick around to the earlier price action. And after price has moved 250 handles to then do almost 300 handles, I'm not considering a huge retracement. I'm considering the rest of the day to be consolidation. But as we can tell, right, we still had an opportunity there. If we now dive down to our 1-minute chart, and let's start off by going over what I meant when I was talking about news ranges. What did I say, yesterday? Well, I said that CPI often runs on side with price, and yes, it did, but it usually forms an inefficiency, and I utilize that inefficiency for my bias or for my trade direction at the beginning of that day almost every single time. But now what you'll see is that CPI did not form any sort of displacement, and it was followed by consolidation. And so, what I understand is that the goal of that news that day was not to manipulate lower or manipulate at all. It was actually to form a range to engineer liquidity, right? So we formed a range and traded within that range. Now, for me to consider any type of trade whenever this specific condition happens, and the thing is, it's very rare that you would see it with important news, right? You see it on small news, but then it's not a move you'd want to trade because it's a tiny, you have a 75 handle candle range for the news, and then it's already run 50 handles before you get your entry. You don't want to get that 25 handle end of the framework, right? So usually you don't see it with big news, but we've seen it today. Now, at that point on, what do I want to see? Well, I first want to wait for time to align with price. When will time align with price? Well, 9:30, I'm looking for a Judas swing. What do we have at 9:30? We have a Judas swing forming SMT. That is SMT at a key time, at a key level, that news range high. So that is a very high probability high. Today, sadly, I failed to notice this. I was pretty off today, so sadly that is the truth, but I am going to review it from what happened and not what I saw. I was waiting for it to go down, then tried along here. Actually, I think I'm looking for the inverse I used here. So what I said in chat, you can actually find it in general. I said if this inverses, I'm long. Right here, I took the breakout on there, got stopped out pretty much immediately. So definitely should have waited further till my daily inefficiency, but that's why we review price. If we talk more specifically about this move down, which was a great trade to take, definitely, don't get me wrong, right? My bias was long, but you could clearly see that we needed to do a retracement. This is a high probability swing, pretty much. You have SMT at a key level, at a key time, and then your pattern forms. So definitely a high probability short right there. Let me just stop using all the same colors here. And if we utilize standard deviations, we're going to utilize our most recent breaker block, but we're also going to look at the real breaker, which is this full range that we've been trading for a while now, unless we broke this. Okay, no. So I would look at the bigger breaker, which in this case is this range. And as you can tell, pretty spot on. I actually didn't see it before, but pretty spot on. Why am I using this full range? Because this breaker is just inside of this. So pretty much here, I'll point it out because right now it looks really hindsight, so I do have to point it out to you guys. We formed a range, and then all of this trading is just inside of that range up until that raid. So this whole trading, I'm not utilizing this range. Why? Because this is the range we were currently trading within, right? The only reason why I'm not utilizing from here to here even is because we swept the highs as I just marked out a second ago, right? So definitely here, you have accumulation, manipulation, key time, aligning with time price, all I'm going to repeat. Standard deviations for high probability objectives, and the one thing it did not do is retrace into the fair value gap, which was your unicorn. And here, utilizing the volume imbalance as well. But if we look on ES, and let me just move my blue box, actually remove my blue box, and ES was already within its inversion fair value gap. As we saw, it dug. Okay, I got it. It dug deeper inside its inefficiency. And if you see here, we can combine the volume imbalance, but if we don't, just to compare price, well, you'll see it also traded back into its fair value gap, but you would have combined the volume imbalance in this case. Now, if ES goes there, then that is lower time frame SMT. That is a concept that is hard to understand for a lot of people, but this right here is lower time frame SMT. Why? Because I know that if I go in a 5-second chart, which I will show you guys, where are we? If I go in a 5-second chart, I'm in a 5-minute chart. What am I doing? There we go. And if we just head right here to today and 9:30, so I don't have to scroll through ages with you guys, you'll see right here that this, what we showcase, is just lower time frame SMT. Right? So I understand that. Do I utilize 5-second SMT? No, but I do utilize 1 minute when it retraces into the inefficiency. I can now treat NQ as if it did. So pretty much that is a manual entry. I believe on a limit we went to the tick, maybe one tick away. I'm gonna look 19131.5, looking at the open, high, low, close values, and here we have 19131.25. I'm telling you, if it goes a tick away and then just retraces it here, I'm taking that entry here. Ain't no way I'm risking that it does not retrace here. So that's definitely a harder one to spot. But anyways, right, if you're trading purely mechanically, weaker asset, take the short on ES. But as I said, I prefer to take NASDAQ because as you can probably see, once again, it would offer a higher risk to reward. So if we just look at the entry on ES, and yes, you would enter on the volume imbalance because it is part of that gap. Now you have fair value gap, and inversion fair value gap, leaving your stop at the high of this candle. That's actually a huge stop for ES, but still allowed for a nice R trade. But if you look at NASDAQ, and if I place the right stop, so fair value gap, fair value gap, fair value gap at the high of the fair value gap candle, 2.33. So actually barely any R difference, and your target would have been hit at the same time as well. So definitely was a great trade on both. A lot of confluence from your standard deviation objectives, and see we can even go past to 5 standard deviations before seeing some sort of retracement. So very clean delivery, barely any drawdown, beautiful rise model. Just before I move forward, do we have any questions maybe about this specific setup? Failed to see SMT at the highs. Well, see, that's what I did, ML. I don't know if you're saying that that's what happened to you too, but that's what I did. I was just not locked in this morning. Had a bad day. Yeah, happened to me too. But I don't know how to say this. Once you get to a certain point where you have the experience behind you, where you've been trading for a while and trading profitably for a while, at least I'm talking for myself, I tend to not care about these things. So, okay, yeah, today I could have made money. I didn't. That was because of me. Sure. Okay, let's log it. Let's journal it. So, what did I do? Well, I failed to see this. I was offside and I was waiting for my long, and then I decided to stop early. Okay, take note of that. But those are normal mistakes that my model allows you to make sometimes. It's okay. As long as you don't make one every day, you'll end up profitable. So I lost out on a little extra money. It's going to take time for me to perfectly execute all the time, which I don't think I'll ever be able to do. So it's just about surrendering to the fact that you won't be perfect. And right here, I showed the entry. Also, that's the R for the random entry I said because it did not retrace into it. But if you entered specifically when ES retraced into it, so we're looking at this candle's close right here. So that definitely offers more R than ES, but that is not pessimistic. This is more pessimistic, and that's always how I like to backtest and review price. All right. If I just move away now, because I didn't see you guys asking any questions, just making sure very quickly. Barely humans, Terrell. That doesn't sound too well. Moving forward, what did we talk about? Well, I want to see price retrace into my inefficiency, and as I said right in the beginning of the week with our weekly outlook, and yesterday in our PA review, I want to see us go long. So what am I going to wait to farm? Well, I'm going to wait for us to tap into this inefficiency and form my entry model, which is a unicorn. That unicorn took its time, let me tell you guys, right? It was slow and it barely got there. This is technically a breaker because that's a lower time frame breaker. I'll show you guys here. Actually, why not? I like to head down to the 15-second just as a general rule when I'm talking about lower time frame and on the 1 minute. So right here, you can see the breaker form. It's just in the 1 minute, it happened so quick that it did not get the time. Please don't start trading 15-second unicorns just because of this. It's not part of the Rise model. It won't ever be a part of the Rise model because you get huge swings with my specific model. If you're going in lower than 1 minute, you're gonna have like 20 trades a day sometimes, and well, I'm exaggerating, of course, but like 5-6 trades a day, and then you'll get losing streaks of like 10 days, 10 trades, which is just 2 days, sure, but 10 trades is pretty rough on the equity curve, if you ask me. But enough talking about all of that bullshit. Unicorn your only entry model? Yes. Yes. For the Rise model, I do take trades earlier. So for example, if I would have perfectly executed today, my first entry would have been on an inversion fair value gap. So actually right here, my first entry would have been actually the retracement into this gap, anticipating the creation of the breaker. So basically, I'm always trading breakers. But sometimes when I'm confident, I anticipate the formation of the breaker. Mic out, mic cut out, or I'm bugging. Okay. Can you guys hear me all right? Just making sure. Sound is good. Awesome. But as I was saying, I always trade breakers, but I don't always wait for the breaker to form and hence the unicorn to form. But my biggest position is always on the unicorn. And in this specific case, you had your fair value gap right here that was too far to overlap with this one, but not too far to overlap with this one. So I would regard this as a unicorn in close proximity. And if we look, we have fair value gap, order block, fair value gap, giving your stop just at the low of this candle. If I'll also point out actually a 10 a.m. open, because we do have to take in mind power of 3, and you'll notice that it's just beautiful. What did we do? We opened, we formed a short-term high to then manipulate lower. So open, formed a low at a key level in price, right? That daily inefficiency that we just inversed, and then went higher, flipped the open. That is a huge confirmation. So beautiful timing for an entry. When we flip the open of a candle, right? We're thinking always power of 3, accumulation, manipulation, distribution. You can see this from the flip of the open. That is definitely beautiful. And if we look now at objectives, what would you look for? Well, it's all defined mechanically, right? You don't have to think. So you go into your 5-minute chart, you go back, you go to the current expansion range. What is our current expansion range? That's our current range that we're trading within. Oh, Ollie, why do you not use this one? I believe it is very clear that this range is just a part of this range, what I just explained. This whole move to the downside was our sell side of the curve, as we call it, our manipulation. So I'm going to look for full reversal, and my target is the opening range highs, right? The highs that we formed at 930. That is my objective. That is a complete market maker model. So the range I'm retracing into is this one. So when I'm going to look for my low-hanging fruit premium array, I'm going to look at the first array in premium, and it's actually the liquidity right here. Now, if I go to a 15-minute very quickly and look at the same range, of course, you'll see that our first 15-minute inefficiency is here. Now, is this part of the model to look at 15-minute inefficiencies for objectives? Not at all. But you sometimes have to adjust to market conditions, which is why the model is not fully mechanical. Now, if we go back down to the 1 minute, looking at the objectives, right, you would have had a partial here. Now, the reality is my RR at this objective would have been too low to consider a partial, I believe. Yes. I would not take money here. Unless maybe I had 10 contracts, I'd take away 1 here. But that is too close to my entry. I want to wait for at least 2R before I can consider anything. So I would use breaker block standard deviations, again, referring to the huge range, and also referring to the last range we utilized to use these 2 levels. Now understand that 1 is my bread and butter, right? It is my highest probability objective. Well, of course, after 0.5, but it is the objective we reach for the more often. What do I also have in this area? Well, I have low resistance failure swings. Now, if these are concepts you don't know, I am not going to teach you. I'm sorry, this is not an opportunity to teach, and it's an opportunity to analyze price together and, of course, to learn, but I don't want to take away value from my students, right? So this is not something I share, but again, ICT teaches it for free on YouTube if you just want to look for it, right? And again, I'd line up the fact that this liquidity lines up with my 15-minute fair value gap. And as I always say, 15-minute is my intraday time frame, right? This is stuff I have shared in my free Rise trading model video on YouTube. So definitely this area with alignment and my low resistance and in a deep premium is a great area for take profit. This is where if I was taking a trade here, I'd say it's going to run all the way up here before going for any sort of retracement. And as you can see, it even went further. We did not need to retrace. but we had a beautiful objective here with 2.52R from that entry with seconds of drawdown. Beautiful low resistance liquidity run. Of course, that's what happens when you're on side with bias, right? Bullish expansion higher. And looking at the final objective, beautiful long. I am terribly sad I missed this, but as I said earlier, right, there will always be more opportunity. Welcome, Josh. Nice to see you in here. Why are your levels anchored from there? What levels specifically are you talking about? Just so I can better help. Little dead silence while we wait, explaining to the YouTube people why. Standard deviations. All right, so I did a complete analysis of standard deviations through my eyes. And when I say through my eyes, I'm talking about breaker blocks because this is what I like, this is what I trade, this is what I do. So I went and I formed a script, and you can find this under projects. I'll gladly link it to you, AR, but you can find over there my thread and my analysis about standard deviations. Now, the more traditional way to utilize standard deviations is here. If I clean up the chart a little bit now that we've shared this, is to utilize, thank you, Emil, for linking it, day after day, right? Is to anchor it to the manipulation leg. And if I drive it on the right side, you would utilize the range of the latest manipulation. And more specifically, there are a bunch of ways to utilize standard deviation. I'm not giving you a one size fits all, but the mainstream way is to use your most recent manipulation range, manipulation leg, and to utilize that for standard deviations. Now, for myself, I've found that using breaker block standard deviations are higher probability for objectives, so for targets, meaning you'll see it in the thread if you actually go and have a look afterwards, but you'll see that these targets are hit more often. So from a statistical standpoint, these are better objectives to have, meaning that any breaker at any point in time has a higher chance of hitting this standard deviation compared to this standard deviation. This is why I utilize the breaker blocks range, and I always refer to the most recent range and also the large range, meaning the range we've been trading into, right? Because this leg, if I just actually move this, let's use the highlighter. All of this trading is just inside of this range. If I just move the color. So this range that was formed from the low all the way to that high, that trading is within this range. So I want to refer to this range for more trend-based objectives. So for my small trade that I'm entering, I'm going to utilize my most recent data because that will be my most valuable based on my trading, right? Personally, my own data. But if I want to compare and say, okay, well, where will this move go intraday? Well, I like to refer to the larger range and more often also to the higher time frame, where I'd usually go to the 5 minute so that I can get it. And if we look at the 5 minute, this is actually a 5 minute breaker block range. That was formed at 10:45. So if I remove my beautiful highlighting work, you'll see that from here to here is my breaker range in my 5 minute time frame. And of course, these things will always align, right? It's the alignment between lower time frames and higher time frames, which is oftentimes something that's a little difficult for newer traders to notice. But if you've been looking at charts for a while, or if you want to learn to do it, look at charts for a while, you'll see that you can look at price and say, oh, well, for example, like I did earlier, right? Looking at this price action and saying, oh, but this is a lower time frame breaker, and we went into the 15-second and found this 15-second breaker. Same thing goes here. I can see the big range and know that it's just a higher time frame range. So whenever I use these words, just go one time frame above on my time frames that are favorited here. If I say higher time frame, it's just a bigger range. Well, it's the 5 minute range. It might be a 15-minute range. Does that make sense? I know I went a little all over the place with that explanation, but definitely go have a look at that study I did about standard deviations. There are also pictures in there to explain even more which standard deviations I've used specifically. On that note, guys, I'm going to do the same thing as I always do. We had the short opportunity and the long opportunity. So after that, am I really going to be looking for a PM trade? Well, for my trading specifically, no. Am I gonna consider a lunge retracement? No. Why? Because that would be greedy of me with my specific model. I have had my opportunities. If I miss them, that is my fault, and I don't want to put myself in a position to FOMO and blow accounts. So I'd rather miss a move that doesn't happen a lot of the time. And especially if you're a market maker models trader, just look at what happened today. I mean, it's a beautiful depiction. It is absolutely textbook depiction of a market maker model, even going through to the mitigation blocks and perfectly utilizing the sell side of the curve. So definitely some nice price action. Sadly, on the most beautiful day I've seen in a while, I was offside. So I guess can't have them all. I'm not seeing anyone type. So I'm guessing there were no questions and everything was pretty clear tonight. All right. Well, then I wish you all great trading tomorrow. And as you can see from the events, we'll also do another one of these tomorrow. So I guess see you all tomorrow. Good luck trading, and I'll be in general to give some insights. Have a good night, guys.